This is Alan Bush with the Daily Financial Forecast for Tuesday, September 20th. Starting out with the stock index futures, we did see higher prices this morning, even though the crude oil market was under some pressure. Also, we are seeing gains continuing, even though we did have the housing starts and permits numbers both coming in weaker than expected. And the logic behind this apparently is that anything that shows that the economy may be a bit on the slow side is a reason for the Fed to not hike its Fed funds rate. So from an interest rate point of view, stock index futures are firming. Also, we do believe that once the Fed meeting is out of the way, and of course we do have the two-day meeting starting today and tomorrow, that once that meeting is out of the way, I think we can see a new leg up for stock index futures. Now, moving over to the currencies, seeing the dollar index advancing, even though it does appear that the Fed will not be raising rates at tomorrow's policy meeting. Also, we are seeing the dollar higher in spite of the housing starts report, as we mentioned, coming in on the weak side. So the U.S. dollar index performing very well, suggesting we may see somewhat higher prices over the rest of today's trade. However, in the yen, lower prices there as the Bank of Japan begins a two-day meeting today. And it does seem rather likely that the Bank of Japan will take their negative interest rate policies even more negative. So look for more accommodation from the Bank of Japan at their policy meeting. So in advance of that announcement tomorrow, I would expect the yen to continue to come under some downside pressure. Also in the Canadian dollar and the Australian dollar, we do believe that the Australian dollar will gain on the Canadian dollar as it has over the last several weeks. And our logic for this is that it appears that the Chinese economy is in a recovery mode, even though it may be somewhat gradual. So that would be a supportive factor for the Australian dollar, since there is quite a bit of trade between those two countries, Australia and China. So look for the Australian dollar to continue to advance against the Canadian dollar. And in the interest rate futures markets, seeing some gains at the long end of the curve. This mainly due to the housing starts report coming in very much on the weak side. Also, the prospects of a Fed rate increase rather limited now, probably only at 15%. Once the Fed meeting is out of the way, I think we can see a new leg down for the long end of the curve. We do feel that inflation is gradually going to accelerate, and that will be a major negative for the bond market. So any rallies in the bonds should be used as a selling opportunity. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.